information. We're taking a look at the currency market now with Shireen Darmalingham, Macroeconomic Strategist over at Standard Bank. Shireen, thanks so much for joining us today. Well, Rand weakness seems to be what's on the cards for today. And of course, a lot of nervousness having crept into the market after the Italian bond auction that went off yesterday.
Yes, indeed. We did see a resurgence of risk aversion, which caused the rand to weaken quite sharply yesterday. And the yield on the Italian bonds, as you mentioned, rose to a euro-era high yesterday on the back of that auction, which really sends a signal that investors are particularly concerned about the country's ability to control its debt, especially, not especially, despite the fact that we did see a change in leadership in that country. We did see the rand firm slightly yesterday on the back of encouraging data out of Japan, which saw the region's growth come in positive after 4 consecutive quarters of quite weak growth. We do expect the rand to continue along the same trends that we have seen, but we could possibly see bouts of strength come through for the remainder of this year. But we do believe that it should be wedded to developments in the Eurozone and the international economy. However, we do see slight depreciation towards the end of the year, with the rand on target to reach our 820 level.
When it comes to those developments in the Eurozone economies, today focus shifts to some of the GDP numbers that are filtering through from those ends. We've got Germany standing front and center, and the market's really paying attention in terms of what comes out of that territory specifically.
Yes, indeed. We did see the GDP data come in more or less in line with what was expected at 1.5% quarter on quarter. But later today, we also have the Eurozone GDP data expected. Markets are expecting an increase of about 0.2%. And has priced in that sort of number going forward as well. We could possibly see that number come in slightly lower than what is currently expected on the back of what has been happening in the Eurozone. So there's quite a lot of volatility coming through from the Eurozone, and we could possibly see a 50% chance that that economy could possibly slip into recession by the final quarter of this year.
Where we've had the Eurozone stealing a lot of the attention and the spotlight, Shireen, just how much attention are you paying to the economic data out of the US? Because today we're anticipating advanced retail sales numbers out of that end, and then also the Empire State Manufacturing Index.
I think the markets will be looking towards that data, especially given the fact that the Empire State Manufacturing Index is expected to show some kind of improvement. For October, it's expected to come in at -2 from -8 the previous month. So that is a bit encouraging, especially given the fact that we have seen very low data or weak data coming through over the past couple of weeks. The retail sales data, however, is expected to provide a mixed bag of results. Rather, we expect an increase, or rather an easing of growth to about 0.3% month on month from a higher increase previously. So a fairly mixed bag of data coming out of the US by the end of today.
What holds more sway in your books when it comes to the euro-dollar cross?
I think the most sway will probably come from the GDP data coming out of the Eurozone, especially because we could possibly see that region slip into recession, as I mentioned before, possibly as early as the final quarter of this year. And that could really cause the euro to weaken quite substantially over the next couple of weeks.
So we've got the direction for the local unit here in South Africa hinging on those developments primarily. Run us through your outlook for the trading day ahead and the kind of trading range that you've pegged out.
Well, we really do expect the rand to remain within the range that we have seen over the past couple of weeks of about 790 to about 810 for today, given the fact that we are wedded to the developments in the international economy.